throughout this whole entire bear market, there's been so many narratives
Now
going
it's
here.
MicroStrategy. I think narratives follow price, basically. One of the biggest reasons why people want to find narratives is sort of rationalize why price is doing something different than what they expect. If people just kind of like ignored the narratives, they'd actually be much better traders, much better investors. I've seen this pattern so many times before where you have a chart that looks like this. You get your first initial sell-off, and then you kind of get some type of like rally back up, and then it finally happens. By the way, last cycle, MicroStrategy, it took 98 weeks to bottom. Care to guess what 98 weeks is after the top in 2024? It's legitimately the first week of October. People don't care. Social interest has been trending down since 2021. This happens every cycle. The most likely outcome here is that we sort of form the low in this region, and then we start the next bull market.
And you're looking at charts all the time. And when we're dealing with charts, we have price as the ultimate truth. But then on the other side, we have narratives. And throughout this whole entire bear market, there's been so many narratives, whether it's Wintermute or Jane Street or Binance. You know, we're always looking for an excuse for why things are
Now
going
it's
here.
MicroStrategy.
Now it's MicroStrategy, yes.
Yeah.
So how do you weigh these two things when it comes to macro and narrative and just dealing with the price on the chart?
Yeah, I don't really care about any of that stuff because I've just seen so many narratives occur. And a lot of times, I think narratives follow price, basically. You know, like when the Bitcoin ETF launched, Bitcoin went up a lot, right, in the next 6 to 12 months. And one of the reasons that people attribute it to was the ETFs. They're like, well, the ETFs. And so when the ETFs launched for Ethereum, people thought it was going to be the same thing, right? And it wasn't. Ethereum went down a lot after the ETFs launched. And so what happened is then people started blaming monetary policy, right? Then they got on this like 2019 train idea of like, oh, it's because of monetary policy and because of this and that. And so that's a great example of how, you know, narrative follows price. Because had Ethereum gone up instead, people would have just said, oh, well, it's because of the ETFs. So I think there's obviously this desire to find narratives, and I think one of the biggest reasons why people want to find narratives is sort of rationalize why price is doing something different than what they expect, probably. And I just find that trading based on narratives is not a great thing because in bear markets, no one cares about the good news. And in bull markets, no one cares about the bad news. The market just brushes it off. It doesn't care. There was no shortage of bad news in the bull market, right? Like we had bad news all the time. People just didn't care. And in the bear market, we've had a lot of good news here and there. I mean, it's not like there hasn't been any good news. It's just that people don't care about it because, you know, there's more to these markets and these narratives that we're seeing. And I think that if people just kind of like ignored the narratives, they'd actually be much better traders, much better investors. I think narratives can often, you know, scare people out of making good investment decisions.
Yeah, narratives are what fill the day-to-day, right? If you're following an asset like Bitcoin, narratives are what make it fun to go on X and talk about it and throw some things against the wall. So, I mean, the main narrative right now, of course, as you said, is MSTR strategy. Would you be willing to bring that chart up just so we could take a look at that?
You know, I actually drew this out for several months ago. I was like, I've seen this pattern so many times before, where you have a chart that looks like this, right? You have a chart that looks like this, and what happens is, and I drew it out over here. I was like, usually what'll happen is you'll get a move up, it'll go back down, it'll get a bigger move up, and then you'll kind of capitulate, and then you'll form your lows over here. By the way, last cycle, MicroStrategy, it took 98 weeks to bottom. Exactly 98 weeks. So if you look at the range on this and you take it from the top for MicroStrategy, you can see the low occurred 98 weeks after the top. Would you care to guess what 98 weeks is after the top in 2024?
October.
Exactly. It's legitimately the first week of October. Late September. Sorry, it's 99. Let's get to 98. The week of October 5th. So for me, there's just too much confluence around like the September-October timeframe to completely ignore it. I'm not saying it has to play out like that. If we were to get a major capitulation like 40K at any point, I'm not going to remain a bear. And already, I mean, already I think it's okay to start accumulating Bitcoin. Normally to start accumulating in the second half of the year ends up working out, right, for Bitcoin. And if you start accumulating at 60K and then it goes to 30 or 40, and if you have the funds to buy more, that can help. That usually helps a lot. And especially it helps with dealing with narratives too, because like for example, let's say you don't buy Bitcoin at all, and then the Clarity Act passes, and then we rally back up to 75K, then people are going to be wishing they bought at 60, right? But if you just bought a little bit, then you're not as concerned if you missed out, because you're like, oh well, at least I got something before that rally. But on the other hand, if we just kind of capitulate down, then we're just, I like the counter trend rallies in the bear markets, because they just give people time to make plans on how they're going to navigate stuff. When you're just dropping every single day, it's harder for people to make, rational decisions, I think.
And one thing you always say is that all these other assets, they bleed out to Bitcoin. So
right.
Why shouldn't we expect MSTR to do the same here?
I think will.
It's showing that one.
Yeah, altcoins bleed to Bitcoin, crypto miners bleed to Bitcoin, crypto companies bleed to Bitcoin, treasury companies will likely bleed to Bitcoin too. And the reason is because of leverage and greed, and they already sold some of their Bitcoin recently, and I know that was more of like a sort of, they didn't have to sell, and it was more for just optics. But the reality is at some point they might have to sell something to help cover other things, to pay back clients, shareholders, whatever. I don't know. I honestly, I don't fully understand all their products, because they have so many of them now. And if I can't understand it in 2 sentences, then it's too complicated for me. The issue with some of the stuff that I have is when you're offering a yield that is far greater than you could get in traditional finance, it makes red flags everywhere, because I think it's somewhat egotistical to assume that the crypto industry has suddenly figured out how to make it so that everyone can get 13% yield, Mm-hmm. So we weren't able to figure this out for thousands of years, but then all of a sudden, crypto comes around and we can offer people 10, 12, 13% and there's no risk. Usually there is a risk. And if you don't understand it, it doesn't mean that it doesn't exist. It just means that you just don't understand it, and hopefully that, you figure it out before things drop. And the issue that I've seen is, and I hope they survive. I hope strategy survives. I don't want to see them, I don't want to see it fail or anything like that. But the reality is, every cycle, there's something that is doing this, where you're supposed to be holding at a certain level, or is trying to stay near that level, and then it just starts selling off, and if this were to play out like some of the other ones, you get your first initial sell off, and then you kind of get some type of rally back up, and people are like, oh, it's returning to normal, and then it finally happens. And I could see something like that happening with some of these products. And I have no interest in putting my money into these financial products, because it's not risk free. A lot of people think this stuff is risk free, and it's just simply not. If you're getting 12%, 13% yield, what are you doing now when it's down 25%, right? So what if you're getting 13% yield? The underlying asset's down 25%. Now, the counter argument is, well, what happens if we just bounce back up, right? But that's not the point. The point is how can investors trust it if this keeps happening, right? So it's not that it can't go back up at all. You probably will have a bounce at some point. It's just that if you're going to keep losing this, then people are going to stop believing in it, because what happens eventually if it doesn't recover? And I think that's the issue, is that you're just sort of, trust is eroding. And at some point, that's going to be that honestly might be the catalyst that ends the bear market, is maybe something like one of these things really bleeding out. And again, it's a process. You shouldn't expect it to play out overnight.
And one thing that we've seen in the crypto cryptoverse, as you say, is that leverage is the widowmaker, right? And by offering this high yield, it invites people to create products on top of it that just create this crazy loop of leverage.
Right.
And what do you see when it comes to the DeFi that's built on top of these things?
Yeah, no, I mean, this is the thing, and this happens every cycle. I don't need to share my screen for this instance. This happens every cycle. And what it is there's a lot of people at the beginning of the bear market that will refuse to admit that we're in a bear market. And they'll fight tooth and nail and say, no, it's not a bear market. Like, you're fudding, you're just a bear, whatever. The people that are responsible for ending the bear market are usually the people that didn't believe in it to begin with. And the reason is because the people that it corresponds to, the end of the bear market, it's people that are forced to sell a lot of times, not people that decide to sell. It's the people that are forced to. And I don't know why I stopped showing my screen, because actually there's a chart I should show related to this. So let me just share this again. So it's basically this. If you look at the Bitcoin chart and you look at volume, right? So volume is a pretty interesting indicator for ending bear markets. Look at how the other bear markets played out, okay? So you had very little volume, and then what happens? Volume, you kind of hit a wall with volume, you see that? And that corresponded to the low. And then look at 2018, very little volume, and then you hit this massive candle, right? Like this massive volume spike. That was the end. Same thing in 2022, right? Relatively low volume. You did have a couple of spikes before the actual low in Q4, and those probably corresponded to like Celsius and Voyager and, some of those other things that went down first. But until you got that volume spike in Q4, the bear market was not over. And so the argument is like, all right, volume has still been fairly low for a while, and we haven't had like one of those major spikes. Like if you look at where the spike was at the end of, so look at these spikes. You have the spike that ended that's the wrong thing. You have this spike here that ended the 2014 bear market. You have this spike that ended the 2018 bear market, right? You can see, and the 2022 bear market. You can see we're nowhere close to that yet. Like we're just not. Like we're not at those levels yet. And so the people, I've been on a lot of like Twitter spaces and stuff, and there's a lot of people that really defend all these financial products as like, oh, well, you just don't understand it and that kind of stuff. But I think that a lot of those guys are going to be the reason the bear market ends, because they're going to be forced to sell. And listen, it doesn't have to be strategy. Maybe it's something else that we're not even thinking about right now. Usually it ends up being something else, but whatever it is, it's a forced liquidation that then is compounded by everything you said, all the stuff that's built on top, and it's just like a liquidation cascade, and then no one knows where it's going to stop, and it usually stops lower than what people think.
And I know we just have a few more minutes left here, but I want to get your take on sentiment. You've been in this space for a very long time. You track it. You have a platform that actually shows social interest in crypto and Bitcoin on social media, and you're a content creator. So what is your take on the vibe in Bitcoin right now?
I mean, honestly, people just don't. It's app complacency. Like, people don't care. I put out a video about this maybe a couple of weeks ago, and it was basically like Bitcoin was entering into the third and final stage of the bear market, where I essentially think of the bear market as separated into 3 stages, right? And ideally you become a bear in stage 1, right? Not stage 3. So stage 1 is, right after the top, all the way down into the first low. So that's stage 1. And that's when a lot of people still don't believe, because you're still technically putting in higher lows and higher highs, right? Like technically that was a higher low. That's stage 1. Stage 2, it kind of starts from this low, and I think goes to when you take out this low right here, right? So that's kind of stage 2. And then stage 3 is when you put in a new low right here, and then it goes to sort of like the final low, right? So you got stage 1, stage 2, and stage 3. So I think we're in stage 3 right now, where you should have one more counter trend rally before the actual low. I'm not trading that counter trend rally. I have no intent on trading it, because maybe there's not a count. Maybe we just capitulate out, right? I mean, just to give you an idea of what that would look like. You know how we made the comparison to 2019 earlier? Mm-hmm. If you actually compare this bear market to 2019, you can see how it followed it pretty closely, and then we had the pandemic drop, right? So if we were just to crash to 40K tomorrow, am I going to remain a bear until October? Absolutely not, right? I would say, all right, good enough for me, you know? But I also can't sit here and call for a pandemic-like drop, because likely we're not going to have that. The only way that we would have a drop like this that I could see in the short term would be like if Stretch or something, if one of those products were to just bleed out like 80% or something, that might make things different. And then you would be looking for a higher low in October rather than a lower low. You would still have a low in October, but it would just be a higher low, more than likely. So if you look at sentiment, this is tracking views to various crypto YouTube channels. Right now, they're averaging around 300,000 to 500,000 a day. Back in 2021, they were averaging 3 to 4 million a day. So you're talking about an order of magnitude less in viewership. Order of magnitude less. That's why altcoins are bleeding to Bitcoin, right? I mean, there's just no one here to buy the altcoins. And because they printed about 1 million more altcoins as well. If you take this chart and combine it with other charts like YouTube subscribers to these content creators, you can see that it's negative 1,000 a day is what it is right now, right? Negative on average. And this is not everyone, right? Like there are some people that are gaining subscribers. There are some channels that are losing subscribers. Like there's some channels that just don't make content anymore, and so they're losing subscribers, or the nature of their content changed a lot. And so, but again, you can see that there's not a lot of new subscriptions to crypto YouTube channels happening right now. And so if you take that indicator with views and you combine it with stuff going on Twitter, right? And let me just show you one quick Twitter one, or X. It's Twitter to me, but this is new followers to various crypto analysts on X. You can also see it's very similar. Like, there's a huge surge in 2021 and nothing really since then. So if you combine all that together and with maybe 3 or 4 more social charts, and you create a risk metric for social, and you create like the social risk metric, it looks like this. And so you can see that social interest has been trending down since 2021, right? Mm-hmm. So my argument is that this entire move here is just a larger version of what we had over here, right? Where it was just trending down, and then it started to go back up after interest rates dropped back down a lot, and after the money printers really came back on. The problem is that the printers can't come back on, rates can't drop until you get a correction in the stock market. And by the way, we're likely approaching a correction in the stock market. Usually you get a correction in stocks in the second half of the year. It can start in August or September is a lot of times when it starts. Like in 2018, it started in September. In 2022, it started in August, and so I would guess you're going to get a correction in stocks in the back half of the year, and that's going to lead to some of the maybe policy getting a bit looser. At least not immediately, but maybe some of the rate hikes will get priced out if you get that correction.
And you get labeled as a bear, but you're just being pragmatic, right? And you're looking for indicators to show you when to flip bullish again. You don't think Bitcoin's going to zero. You're just looking for the next bull market to start. And that is why you put your conference in November of this year, your first conference. So
right. Yeah. I'm hoping the lows in by then. I mean, it makes for a much better conference. Like, and I thought about doing it last year. What I'm going to say, sorry guys, nothing to see here. See you next year. I mean, no, I don't know. I mean, the conference is more than just Bitcoin. Like, we're going to talk about other stuff too. But obviously, I hope Bitcoin is the main theme, because it'd be great if I could go to the conference with like a clear conscience of all right, the bear market is over, and let's get bullish again. There's actually another really interesting chart. If you have a minute, I could show.
Yeah.
Let me see if I can find it. It's. I'm not talking about politics. I want to be clear, but it just shows you the path of Bitcoin under the last administration, under Biden, and then now under Trump. And I just want to show you how closely they're aligned right now. So if you look at Bitcoin under Biden, the blue line, and then under Trump, it's basically the same area, right? And so what happens is, volatility like just died out, and then we got the final drop in Q4, and then the bull market began. So that's what I'm thinking is the most likely outcome here, is that we sort of form the low in this region and then we start the next bull market. And by the way, I mean, I think there's a good chance that social interest could bottom late this year, because I have to believe that if you're going to stick around for 2022 and 2026, and you've already, and they've all seen the altcoins basically go into zero, there was no alt season, I just have to imagine that the people that are still here in 2027 are probably not going anywhere, right? Like they're probably going to stay here. So at that point, I think social risk will likely bottom and we'll start to see it trend back up.
Yeah, the only people left are those with greater motivations than just price action, right?
There's dozens of us left.
Yes. And we're here to talk to them. How many apps does it take to manage your Bitcoin? One to buy, one to send, one for Lightning, and another for loans. That's a lot of friction. Well, now there's Rhino. Listen to the end, and I'll tell you how they'll set you up with $10 of free Bitcoin. Rhino is a next-generation Bitcoin app that makes living on Bitcoin easy. At Rhino, you can buy Bitcoin with zero fees. Get a Bitcoin-backed loan right in the app. Move cash globally over Bitcoin rails fast and easy. Automate your stacking with a DCA plan, so your stack is growing, whether the market is up, down, or you're touching grass. And it doesn't stop there. Bill pay, debit and credit cards, as well as retirement accounts are all coming soon. At Rhino, your Bitcoin is never rehypothecated. Security comes first, with biometric verification, 24/7 fraud protection, and the ability to move your Bitcoin to self-custody whenever you're ready. Click the link below in the description and download Rhino for iOS or Android. Use code Bitcoin News and Rhino will drop you $10 of free Bitcoin right into your wallet to start you on your stacking journey. Get the most Bitcoin for your dollar with Rhino.